I'm Jeffrey Rogo, and this is Barron's Buzz. Here with me to preview the latest issue of Barron's is senior editor Jack Howe. Jack, thank you so much for joining us.
Hello.
So, major story this week. Coming to your theaters is Wonder Woman. We have Wonder Man with us.
Wow.
I know, Barron's Wonder Man. So
I got to get that on my business card.
Exactly. So Wonder Woman has gotten great reviews.
Yes.
It looks like an outstanding movie.
Yes.
We all love Gail Gadot. Is that right?
I'll go with it, yeah.
Gal Gadot, we all love her.
Yes.
And she's actually going to be important for the stock?
Yeah, well, look, some things are going Time Warner's way. The most important thing for the stock is that they have a deal in the works with AT&T. We viewed Time Warner favorably a year ago. Then this deal came about, and the stock jumped on the deal news, but there was a pretty big gap between where it was trading and the deal price. There was a lot of skepticism that the deal will go through. At the time, this was back in October of last year, both Hillary Clinton and Donald Trump, who you may have heard of, both saying that they had big problems with the deal, right? But fast forward, it's looking more and more likely that the deal is going to go through. Trump's pick for the FCC and his antitrust guy, they both view this deal favorably. The stock is creeping higher. If you buy Time Warner shares here, you can make about 8% on them by the time the deal closes, which could be before the end of the year, right? Then you're going to get a half AT&T stock. Right, AT&T has some fine things going on too, with the gradual shift to 5G. But they have this record of the stock goes nowhere while deals are being hammered out. But after deals close, the past 4 deals, the stock has gone up an average of 26% in the year after a deal closes, because they can bring down costs and use the free cash flow to pay down debt and so forth. So I think it's a good opportunity for a trade here. We thought last fall was time to cash in those gains on Time Warner, but we're telling people, you know what, if you're looking for a trade over the next year, maybe get back in. If for some reason, in the unlikely event the deal doesn't work out, because of, like, as you say, the likely success of this Wonder Woman movie, other things going very well for HBO and other Time Warner properties, the stock looks pretty darn good as a standalone right now.
Interesting. So moving on inside the magazine a little bit, one thing I didn't know is how well consumer stocks have done this year. Consumer discretionary actually is one of the 2 best performing sectors. It's not going to last.
Well, it's pretty narrow, right? There's only like a few of them that are doing so well and propelling the whole group higher. Actually, consumer spending growth right now is pretty ho-hum, especially considering how low the unemployment rate is. And our columnist looks at why that is the case, what the prospects are for improvement. He doesn't really see much sign of improvement on the horizon. Consumers are still loaded up with debt. There's this anti-materialist, anti-consumerist trend going on. A host of reasons out there, and also some of just the costs of life, healthcare, education, things like this, have really risen as a percentage of disposable income. It's leaving less room to spend. So everybody's waiting for that big boom in consumer spending that's right around the corner. He's a little skeptical that we're going to get that.
Speaking of my own consumer spending, whenever I order things, I say, "Hey Alexa, get me some batteries."
Right.
Hey Alexa,
that's not an Amazon thing. Your butler is actually
named Alexa. She's terrific.
Yeah.
So I say, like, "Hey Alexa, get me some shoes," and they go and they find me batteries and shoes, but I'm not picking a brand.
Yeah.
I'm not telling Alexa to go buy me some New Balances. She just knows these are the best shoes for me. So is that going to mean as technology comes in, brands are going to die?
Yeah, there's this NYU professor, Scott Galloway. He's got these viral videos. He's, talks about the future of all sorts of tech things, and he sees Amazon as a company that's a potential destroyer of brands. I mean, think about it. You go on just the website, right? You go on there. You've got the power of reviews, not curated. Anybody can pile on and say what they want. When you have that, the whole purpose of a brand is you're supposed to have this label that tells you, hey, is this thing any good or not? And that's supposed to stick with people. But if you have the power of reviews on Amazon, brands start to become less important. If brands are less important, then they deserve less of a price premium. So that's going on the website. Now Alexa and this possibility of ordering by voice down the road just, it looks likely to accelerate that process. It's a problem for companies who make money in big price premiums because of the strength of their brands.
Well, I will tell you one brand that you should not ignore.
Yes.
Barron's Magazine.
Whoa.
Fantastic brand every week. And please make sure to go to your newsstand and buy Barron's this week. Jack, thank you so much for joining us.
Thank you.